All right. Today is Tuesday, the 10th of January, and this is a recap for the stock market activities today. And folks, I got a good one for you tonight. Let's start by this. Remember when I told you that when the government scientists say that this winter season is going to be hotter and drier than usual, and I told you when they say that, prepare to freeze your nuts. Because the experts told us that here in the West and the South, we're going to have a drier winter. We're not going to have a lot of rain, and the drought is going to get worse. And here's how the drought is getting worse. Take a look.
California needs water, but not like this. Besieged by weeks of powerful storms, the ground here is saturated. That's leading to landslides and debris flows. In Los Angeles County, torrential downpours opened up this sinkhole overnight. It swallowed 2 occupied cars. Firefighters had to use ladders to rescue the driver and a teenager from the 15-foot pit. In San Luis Obispo County, at least one person died when their car was overtaken, and a 5-year-old boy went missing during a rescue, believed to have been swept away. In Santa Cruz County, the San Lorenzo River quickly climbed to a major flood stage.
We've been out of power, just got it back on for only one day to lose it again.
Mud-soaked hillsides are sliding down. This one blocked the highway into town.
It's like a rat trying to get out of a maze, trying to find the different little route to get through.
This is crazy.
Ellen DeGeneres is one of thousands of Santa Barbara County residents facing mandatory evacuation orders.
This street next to our house never flows, ever.
And of course, while we have tragic news and our condolences to the victims of this storm, we also have good news, the fact that the drought is actually getting a lot better. As you can see here, the before and after, we had a lot of drought in Central California, and well, we still have some right now, but it's a lot better. And here's the problem. The drought should have been solved by this massive storm, but the geniuses in California, they actually drain all of that rainwater back to the ocean. So all of this rainwater is poof, gone. All of the gains disappeared and evaporated. But the good news is your gains in the stock market still have not evaporated yet. Keyword, yet. So let's talk about that, and here it is in focus tonight. Let's give you an update about Jerome Powell from Sweden, and then the tsunami of layoffs, and lastly, an update in the tulip market this time around regarding Binance and the next disaster. And we start tonight from Stockholm, Sweden, where the chairman of the Fed, Jerome Powell, finally found his balls. He came out hawkish, as we expected, saying, you know what, I don't care about the wage inflation going down, I don't care about anything. I'm going to stay the course until the job is done. And by the job is done, meaning you got to lose your job. Not him, you. The chairman of the Fed also said that the measures he's taking perhaps not popular, but who cares? You don't like it? Cry me a river. We got to crush the economy here. To clean up the mess that I've created when I insisted that inflation is going to be transitory. But hey, let's forget about the past, okay? Let bygones be bygones. And why is the chairman of the Fed still too hawkish for now? The answer is, look at this, financial conditions actually loosened. Something the Fed doesn't want to see because as financial conditions loosen, the probability for a rebound in inflation becomes highly likely. And this is exactly what BlackRock, by the way, warned us about today. That the market is not really anticipating the fact that we could see a revival of inflation because usually in any inflation episode, just look back in the 70s, we don't have a spike and then inflation just goes down in a nosedive and that's it, the story's over. Usually it goes down, everybody assumes that it's over, and then it comes back again. And again, and again, until the entire economy is kaput. And therefore, the boss from JP Morgan Chase, aka the Landromat, Jamie Dimon, said today that the Fed may need to hike interest rates above 5%. Now, all of a sudden, everybody's saying 5%. Remember when in this channel we said that to tackle inflation, you gotta go above the CPI? And people said, oh, Maverick, you're crazy. You're too bearish. You're a perma-bear. Now, all of a sudden, the same people who said, oh, come on, 5%, that's impossible. Now they're saying 5% and beyond. And little by little, it's going to be 6, and then 7, and it keeps going on until the economy blows up. Because while you think that inflation might be giving up, in reality, inflation has a lot of ground to recover and move higher again. And when inflation moves higher in certain products that the population loves, this could result in mass uprising and revolutions. Take, for example, what's going on in Ireland right now, where the prices of guineas are rising. And rumor has it, the revolution in Ireland already began. Although, a lot of my Irish friends say that this whole Guinness thing is just an American stereotype. We don't drink Guinness in Ireland. What do I know? I'm assuming they drink something over there. But anyhow, as I said before, the chairman of the Fed, Jay Powell, finally found his balls. All of a sudden, Jerome Powell is a tough guy. He even says that the Fed is not going to become a climate policymaker. Take your climate change and shove it you know where. By the way, same guy who last year said inflation is going to be transitory and the Fed should lead the way when it comes to gender equality and climate change and blah, 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 blah. But all of a sudden, Dark Powell is here. And he says, you know what? To hell with climate change, to hell with the gender whatever, to hell with your portfolio. I'm going to crush everything. Somebody going to stop Dark Powell. Where's Marvel when you need it? But anyways, moving on to the second story of the day, which is the tsunami of layoffs. And it goes hand in hand with what the Fed is doing. Because to crush inflation, the Fed needs to crush the economy. The economy is not going to get crushed until you lose your job. Because when you lose your job, you can't spend anymore. You can't swipe those credit cards up and down, up and down, up and down, and splurge like a f***ing moron. And if you happen to work for Goldman Sachs, you probably already lost your job because Goldman Sachs is cutting up to 3,200 employees. And the reason is Goldman is having a tough time in the stock market. Turns out Wall Street is actually a tough game. Who would have thought when Goldman Sachs decided to tell their employees, oh, you can work from home. And oh, by the way, no need for suits. You can come with your pajamas and work at Goldman Sachs. What is it? You selling hot dogs or financial services? But anyhow, now you see the results. Underperforming. Goldman Sachs has to cut all of these jobs. And another tragedy that we heard from today coming from Bloodbath & Beyond, which reported earnings, or lack thereof, losing $400 million. And of course, the suppliers are losing their patience. You're not selling anything here. And perhaps Bed Bath & Beyond should start selling hot dogs to save the company. Because right now, with this miserable report, they're laying off hundreds, if not thousands of employees. And of course, the stock rallied double digits based on this report. Feed me more layoffs. That's what the stock market is saying. You want me to go higher? Fire more employees. And therefore I say, ladies and gentlemen, look at your respective company's stock. If it is down in the toilet, you're gonna lose your job. That's how it's gonna work. And then we have another tragedy here in the Tulip market, Coinbase. And the company today announced laying off 20% of its entire workforce. And of course, the stock rallied higher by double digits. This is going to keep happening, folks. The CEOs now figured a way. Back in 2020, 2021, you can announce a stock split and your stock surges higher. In 2023, you announce layoffs, your stock shoots up higher. Until the bankruptcy hits, of course. In the meantime, you can do a quick pump and dump scheme. And speaking of pump and dump schemes, here's your update for the Tulip market.
Fortune favors the brave.
And again, we start with Coinbase. Coinbase is laying off 20% of its workforce, or an equivalent of 950 jobs. And when it rains, it pours for Coinbase because the entire crypto market is full of fraud, scams, hustlers, pimps, filth, disgusting stuff all over the place. And today we heard that the brother of a former Coinbase product manager was sentenced to 10 months for his role in a scheme to trade on confidential information. And again, the Tulip market entirely is just a dark world of crime. And you can say the same thing, hey Maverick, what about Wall Street? Wall Street is full of crime. And I say you're right, but the difference is the criminals on Wall Street happen to be the rulers of the country. The criminals in the Tulip market happen to be sad pimps who just want to be fraudsters. And they get caught because they're stupid. They haven't bought politicians, they haven't bought the law, although your boy Sam Bankrupt Fraud attempted to do that, but he got caught, of course. And now, when we talk about FTX, which at some point was worth over $30 billion, well, now the money is poof, gone. And nobody knows where. $33 billion or whatever went missing. Nobody knows where. Nobody wants to know where. That's what I should say. And remember when Sam Bankrupt Fraud did the whole promo about this is just the humble billionaire who doesn't care about wealth? He doesn't eat meat, he eats carrots and cucumbers, and he lives with roommates, and he drives a Corolla. All of that was just an act, and the fraud was actually living a lavish lifestyle funded by your money. FTX spent $40 million in hotels, catering, and flights, according to the bankruptcy documents. Sam Bankrupt Fraud spent $7 million worth of your money on food. Wait a minute, cucumbers and carrots worth $7 million? What's going on here? And while Bankrupt Fraud claims that he lives with roommates, he actually spent $15 million on luxury Bahamian hotels. He was living the life, baby. But the story gets a little shadier as more information is revealed. For example, we now know that FTX executives had $8 billion in liabilities in a customer account that Bankrupt Fraud referred to as our Korean friend. Who's our Korean friend? Nobody knows. Kim Jong-un? I don't know. And then there is this. FTX owned $11.5 million stake in a tiny rural bank in Washington state with just 3 employees. Come on. This is money laundering 101. This is the golden age of fraud, ladies and gentlemen. Remember the deli sandwich shop in New Jersey, which was actually a front for a multi-million dollars Ponzi scheme? Now we have a bank in a rural Washington state area with 3 employees, and the guy been washing tens of millions of dollars using this bank. On whose behalf? We're not allowed to know. And unfortunately for Bankrupt Fraud, his allies, employees, and even his girlfriend are now all snitching on him to the feds. Everybody's now running for cover, to cover for their own ass, of course, because the feds need a scapegoat. They want to say, you know what? Don't look at the money laundering stuff. Sam Bankrupt Fraud is the bad guy. Just look at that guy. He just stole money. But the people he washed money for, just shut up and stop asking questions. Otherwise, you might end up being in jail too. And by the way, who's the court artist here? Because look at this fine piece of art. This doesn't even look remotely close to Sam Bankrupt Fraud. The guy is yellow. But now watch. Somebody's gonna sell this as an NFT. Anyhow, with the collapse of FTX, all of the pimps and the sponsors of FTX are now also feeling the pain, including, of course, Tom Brady. Tom Brady is set to lose all of his money. He lost his wife. Now he's gonna lose his money. And how's Tampa Bay doing, by the way? And here's former Mrs. Brady. She's free now, and the first thing she did is posing topless. So I guess for Tom, when it rains, it pours. And in this dark world of crime we call the crypto tulip market, the threat is not just stemming from all of these frauds, filth, and scams. It's also stemming from the government. The regulators now see the competition. How dare you have your own frauds? We do all the frauding. We do it in the stock market. We do it in taxes. We do it in the housing market. But you create your own tulips and you start stealing money too, and you don't cut us in? How dare you? For example, the government in New York is now ending crypto mining. No more. And if you thought that you own your Tulip account, think again, because in Celsius, for example, we now know that thousands of crypto investors actually don't own their accounts. You see, you go to the casino, you sit on the table, you give the dealer your money, that's still your money. Until you lose it, of course, and then it becomes the house money. In the Tulip market, you give these exchanges your money, and it becomes the house money right away, without even playing. So a lot of these Tulip investors, when they realized that this whole thing is a fraud and they attempted to withdraw their money, sorry, that's not your money anymore. You don't own the account. And I know what you're going to say, but I'm going to sue them, Maverick. Well, good luck with that, because it was all in the fine print. And you agreed on all of that. You agreed to give your money away for free. And look, when you have low lives promoting this thing, cryptos, the biggest losers in the world, the pimps, the hustlers, it is usually a warning sign. And now that the whole house is collapsing, they're turning against each other, accusing each other of fraud. You're the bad guy. You're the one collapsing this whole scheme on top of all of us. We didn't cash out. Couldn't you wait till we rob our customers and cash out and then let the whole world know that this is fraud? But folks, when we talk about the collapse of FTX, that is nothing compared to the upcoming collapse of Binance. That's the big one. And while the CEO of Binance is saying, hey, that FTX is just FTX, Sam Bankrupt Fraud is a bad guy, I'm the good guy, I'm taking care of you. The devil is always in the details. Because for one thing, Binance is losing confidence and bleeding more money than we've ever imagined. Matter of fact, according to an estimate by Forbes, $12 billion gone from Binance in less than 60 days, and the number continues to climb higher. This is mass liquidation, and folks, if you know anything about the financial world, you know that when you have a company, an entity in this case, and all of a sudden you have mass liquidation, something is going to break until you find another source to replenish all of these billions of dollars that customers are taking out. And will Binance at some point withhold all of these withdrawals? You can't take your money back? Because we now know. Remember, Binance says we're not FTX, we have a stable coin that we're pegging your assets against. And I'd rather have my assets being pegged against an actual peg, because at least that has value, versus this Tulip for Binance, which they promote as a stable coin. It's actually not. Binance has acknowledged past flaws in the management of its stable coin reserves, which at times led to more than $1 billion in missing collateral. Whoops. And look at the gap here. They say that it is backed 1-to-1. Well, that was not the case throughout 21. And who knows what's going on right now? Is it still pegged 1-to-1, or is the gap widening? If that is the case, tick-tock. It is just a matter of time before Binance blows up. And look, folks, during the mania of 2020, 2021, when all of these shit coins were moving higher, significantly blowing up 10, 20, 30, even 100% in a short amount of time, folks like me been warning not to be indulged in this mania. It's gonna come down crashing. This is fraud. This is a tulip market mania. Folks like Charlie Munger, for example, called Bitcoin rat poison. What was the response from the trader community? Or you're just a boomer, bro. You're just jealous of the gains. Well, where are the gains now? You see, a lot of our friends in the finfluencer community, I don't know what the hell that means, but they got sucked into this FTX fraud and they promoted FTX. They took the cash. Big mistake. It damages your reputation. It's not worth the money. You see, in the heights of the crypto mania, these firms were spending like a drunken sailor on advertising. Another red flag. If you have an actual asset, you don't need a lot of advertising to do. And me, in this channel, I benefited from the mania because FTX, Crypto.com, all of them advertised in this channel using YouTube and Google. The ad revenue was sky high. Now the ad revenue is down 50%. But FTX also wanted to advertise in this channel, not by using Google ads or YouTube. They wanted me and other financial channels to create individual videos, specific videos promoting FTX. And they offered a decent amount of money, a lot more than what YouTube pays. I stuck to my ground. I refused because I've been telling my viewers that cryptos are fraud. They're tulips, and all of a sudden, I take a check and promote FTX. I'm not that desperate, and I'm very thankful for that choice because turns out FTX is indeed a fraud. And the lesson here, folks, is short-term gains versus long-term gains. While other channels have been promoting the mania, including Tulips, including the meme stocks, the SPACs, and they got an insane amount of views in a short amount of time. This channel refused to do so. This channel was actually warning investors not to fall in these traps. I did not get the kind of views or subscribers that other channels did who promoted the mania. But now we know who was right and who was wrong. And while the viewers of other YouTube channels are now bankrupt, they lost their money, the viewers of this channel are still here. They're still in the game because they avoided all of these traps, all of these frauds, SPACs, tulips, scams, meme stocks, and therefore my viewers are still alive. They're still here. So the lesson is, look for long-term gains, not the immediate short-term gains. It's always the best strategy. And I conclude with this, words from Dr. Rubini about the tulip market and Binance. Take a listen.
What are the 7 C's of crypto? Concealed, corrupt, crooks, criminals, conmen, carnival barkers, and finally CZ, who's just on the stage right now. I was supposed to debate him a year ago here in the UAE. At the last moment, he decided to escape. He didn't want to be on the same stage as me. Guess what? 2 years before, I debated Arthur Hayes, CEO of BitMEX, and a week later he was indicted and ended up in jail because I wrote he was a crook. At your seat, who was supposed to be here just today, Kevin Leary was a paid hack for FTX. Good reasons. I hope that CNBC is going to get rid of him. Unfortunately, this is an ecosystem that is totally corrupt. Unfortunately, it is, and I think the lesson of the last few weeks is these people should be out of here. I can't believe that CZ and Binance has a license to operate in the UAE. It's banned in the UK, is under investigation by the US Justice Department for money laundering, $8 billion of money from Iran. and he's here on this stage, and he has residence in this country. The regulator should be thinking carefully. That's a walking time bomb.
And with that, folks, let's move on to the coverage of the stock market, and we begin with the closing of the indices today. And here we go. The Dow Industrial Average in the green, scoring gains worth about 186.45 points or 0.56%. The Nasdaq leading the gains. Actually, the Russell 2000 led the gains, but among the big three, Nasdaq number one, with gains worth 106.98 points or a gain of 1.01%. The S&P in the green by 27.16 points or a gain of 0.7%. When we look at the sector's performances, what's going on here? The risk-on theme continues at number 1, capturing the gold metals, cyclicals, number 2 for the silver, materials, number 3 for the bronze, communication services. We also see technology gaining again. Meanwhile, the laggards, the recession theme winners, defensives and utilities, because for now the market believes the soft landing is here, inflation is gone, the economy is not deteriorating at all, and the Fed will cut rates really soon. Believe me. So they're going with the risk on, and they're dumping these value stocks, the recession type kind of stocks. When it comes to the market breadth, the NYSE 69% advancing versus 30% declining. In a similar story here in the Nasdaq with 69% advancing versus 28% declining. We have to get to, let's say, 75, 80, hopefully before the CPI, because that makes the risk versus reward to the downside. If we get another big time rally tomorrow, heading into the CPI, the risk versus reward says it doesn't matter what the CPI is going to read because the market breadth went too far and therefore the risk becomes to the downside. When it comes to commodities, the dollar not moving one way or the other, but keeping ground, keeping support at 103. And therefore, we see mixed picture across the board. When it comes to energy, for example, muted reaction for crude, but the volatility continues in natural gas, up big one day, down big another. But all in all, natural gas has been hit really, really hard. Is it a buy right now? I honestly would not trade the futures. The volatility is insane. What I would trade is natural gas stocks. There could be an opportunity here, but it depends on the weather and specifically across the Atlantic and Europe. So far, the season over there has been warmer than expectations. But again, it's just one storm away before we see all of these reserves in Europe being depleted. And then what happens? If the Freeport facility is back online, we will see a massive recovery in natural gas. I just don't know when. But if you want to play it, use stocks, individual stocks, not the commodity. Insane amount of volatility here. When it comes to softs, we have mixed picture here. Massive down day for coffee futures, losing ground by a little over 5.5%. Cocoa down big, a little over 3%. Cotton down by about 1.75%. On the other hand, OJ is muted while we have gains, big ones, for lumber futures worth about 6%, and then sugar, which managed to close the day with gains of a little over 2%. When it comes to metals, again, the dollar is not doing anything, and therefore we have a mixed picture, be it pretty much around the flat line. Gold, silver, platinum, palladium, all muted for the day, but the rally in copper goes on because the rally in copper has two tailwinds, at least for now. Number 1, the dollar weakness. Number 2, the reopening narrative in China, which, again, just because China's reopening, that doesn't mean that the consumer is going to go out splurging. That doesn't mean that we're going to see an economic recovery right away because consumer behavior changes. We'll talk more about that in the heat map analysis, but copper is getting closer to a point where it's going to pull back big, especially if the CPI comes out disappointing. We see the dollar moving higher again. When it comes to meats, flattish activities, with exception of lean hogs futures down by about 1%. When it comes to grains futures, down across the board, led by wheat futures down about 1.75%. On the other hand, leading the gains in grains, oats futures with modest gains worth about a little over 1%. On to the big casino, the options market. What do we see here? All in all, the volume is down. It continues to go down. And again, in this situation, this is good for the bulls because it indicates that the tsunami of buying put options has come to an end. Now, that doesn't mean that stocks cannot go down. They can go down, but they need a major fundamental catalyst that will push the dollar significantly higher. For example, the only thing I can see in the horizon right now is the CPI being an upset surprise. But absent of that, the options market says the gravity remains to the upside as the volume goes down and the ratio improves in favor of calls. Now, the hottest three tables in the casino happen to be the Three Musketeers, Tesla, Apple, and Amazon. And per usual, Tesla at number one at around 2 million contracts traded today. About 53% of those were calls. Apple at number two with around 850,000 contracts traded today. Once again, puts outweighing calls, so Apple is a little weaker than Tesla, Amazon, and you see Apple lagging these names. The options market is telling you that it's going to take a little while before we see confidence being restored in Apple because for now, about 53% of the volume was puts, not calls. At number three, Amazon with around 750,000 contracts traded today. About 51.5% of those were calls. When it comes to the unusual activities that took place in the options market today, when the volume goes down, it indicates that the primary move that has been going on, in this case the downward move of buying puts, that has come to a halt, but it also indicates lack of conviction, meaning traders are now waiting for a major catalyst to be out of the way. And this major catalyst is the CPI, and therefore the volume is down, the amount spent in these trades is down big. Regardless, let's look at the call spread for RKKKKK for Tesla witch Cathie Wood. Last year was a bad year for Mama Cathie. This year, a lot better so far, but wait for it. It's about to get a lot worse. Just give it a little time. In the meantime, can we play an upside for RKKKK? The answer is yes. And somebody's using a low risk strategy here, betting on a short squeeze in RKK. If it happens, it happens. If it doesn't happen, no harm done. Because they bought the $40 calls and they sold the 42 ones, all for the expiration date February 3rd, with expectations that RKKKK could move higher and gain more than 19% by then, but not more than 25%. They paid around 20 cents a piece for buying the $40 calls, and they received in credit about 10 cents a piece from selling the 42 calls. All in all, the entry cost is reduced to 10 cents a piece, and that brings the amount spent for this trade to $170,000. And then what about FCX, Freeport McMoran, a stock that I own, but it has been rallying significantly higher, perhaps out of whack to overbought conditions because of the rallying copper. Yet somebody sees more gains to come here, which, in my opinion, could be a contrarian indicator that FCX will pull back. We'll talk more about that in the charts analysis, but somebody sees it moving higher all the way to 55, and therefore they bought the 55 calls with the expiration date March 17th, with expectations that FCX could move higher and gain more than 23% by the expiration date. They paid around 70 cents a piece to enter this trade, all in all spending around $1 million. And then what about the trade for the ticker EXAS? This is for Exact Sciences, a name that Mama Cathie is a fan of. I believe she bought some shares lately, and the name's up big for the year so far. Gains worth more than 20%. But somebody sees a pullback coming. Overbought conditions, perhaps, and therefore they bought the $50 puts for the expiration date February 17th, with expectations that EXAS could pull back and lose more than 17% of its value by then. They paid around $1.55 a piece to enter this trade, all in all spending around $1 million. Last but not least, what about BABA Alibaba, the hottest stock for the year? But is it due for a pullback? We'll look at the chart in the charts analysis, but for now, somebody sees the rally going on for a little more, and therefore they bought the 123 calls for the expiration date January 13th, meaning this Friday, with expectations that Alibaba could add gains worth more than 7% by Friday. They paid around 45 cents a piece to enter this trade, all in all spending around $330,000. On to the heat map. What's going on here? Again, the move away from the winners to the losers goes on, but not as aggressive as we saw yesterday, for example. The healthcare names still weak, the consumer defensives lagging, utilities are muted. On the other hand, the leaders, the chip names, NVIDIA, Qualcomm, although we have bad news about chips, we'll talk about that in a minute, but we're also seeing the typical phenomenon of the losers of last year being the winners of this year so far. We're talking about chips, we're talking about names such as Meta, Amazon, we talked about Netflix, Amazon, even GE in industrials moving higher. GE is the winner for the year. And this is a typical phenomenon, folks. There's nothing new here. Folks rotate from winners to losers, and then reality hits again that we're still in a bear market, and therefore I say that the rotation opens a lot of opportunities. Now let's talk about corporate headlines because we have a lot of them, and we start with China. There's a lot of talk about the reopening in China, and that should be a catalyst for Chinese stocks to move higher. Buy Alibaba, buy JD, buy Pinduoduo, NIO, the casinos. But in reality, the Chinese economy is not going to recover so fast. Take, for example, what's going on in Macau. The headline reads, few tourists, deserted streets, and casino hub Macau after reopening. So again, you could chase Las Vegas Sands, for example, but reality is going to hit at some point. And therefore, I say between LVS and Wynn, I'd go with Wynn if I have to make this trade, because at least it has some exposure to Las Vegas. And then when we talk about chips, we have bad news from Taiwan Semi, reporting earnings today and missing the estimates, missing sales. And this is the first time TSMC misses earnings in 2 years. So this is a bad leading indicator for chips. When folks say this is the opportunity to buy chips, forget about it. All what they're doing right now is short covering, rotating to the losers, which is a typical phenomenon in the beginning of the year. But at some point, the fundamentals are going to play out, and chips have not recovered yet. There is an oversupply problem, and it's going to take to 24, 25 even before we see a recovery. And we have more bad news for chips, this time around for Broadcom, and the reason is Apple DI Mob announced today that they're not going to buy a key component from Broadcom, and instead they will produce the piece in-house. And since we're talking about China and reopening, a lot of folks are buying Moderna, mRNA, in anticipation that perhaps Chinese authorities will announce buying the jab for the thing from Moderna. But be careful here because Senator Bernie Sanders is coming for you. And he now urges Moderna not to hike prices of the thing vaccine by too much. Otherwise, I'm not going to do anything about it. And then we have more bad news about a name that I'm shorting, Blackstone. Blackstone wants to get the rent. They want the rent to be higher and higher and higher. Own nothing and be happy. But the city of New York says no thanks. The battle in a famous Manhattan complex, an old school building with a lot of apartments, the Blackstone looking to juice for profits. Well, the city of New York says the rent stays the same. And that is a loss for Blackstone. And then we got the breaking news after hours, since we're talking about housing and apartments and all of that. Wells Fargo, one of the biggest players in the mortgage market, they're now getting out of it. And this is a move a lot of watchers look at as a signal, a bad omen for the housing market. When Wells Fargo says, goodbye, we're cashing out, we're done here. What do you think is going to happen next? The collapse of the housing market. Prices are too high. Nobody can afford these houses. All what's going to take is for capitulation. When homeowners finally realize that the Fed is not going to reduce interest rates anytime soon, they're not going to ease anytime soon. This is going to last for a long time. The housing market is going to slow down dramatically. Folks are going to lose their homes. They're going to have to dump some of their homes. These so-called investors who are buying properties all over the place, robbing the American dream to list these single-family homes on Airbnb, well, business will slow down dramatically. All of a sudden, these investors, quote-unquote, will not be able to pay the mortgage. So they have to get rid of the house. All of a sudden, we're going to have supply arriving out of nowhere, and home prices will go down big. And Wells Fargo is getting out while they're still on top. Good move by Wells Fargo. And then we have the FTC crushing one of my stocks, at least used to be Coca-Cola. I actually rotated from Coca-Cola to PepsiCo. It doesn't matter, both of them are good, but for me, Coca-Cola is kind of dependent on consumer spending, going to stadiums, going to concerts, movie theaters, etc., etc. And in a recession, that doesn't work pretty good. PepsiCo, on the other hand, is more diverse. It has a lot of food products, and these tend to be more resilient in a recession. In any case, the FTC began a probe of pricing practices for both Coca-Cola and PepsiCo, where they give large vendors better pricing than smaller ones. And this news hit the stock by a little bit. And then we have bad news for Spirit Airlines, good news for labor, bad news for the company, because now we have a contract that the union just got approved to increase pay by 34% over 2 years. So again, you talk about wage inflation cooling down, it's over. The Fed must cut rates. What is this? This is inflationary. This is not going to stop until the entire economy gets crushed. Sad for the unions because they're finally winning. Labor is finally winning in America. And this is unacceptable to the Fed, to the Wall Streeters, and the corporations. And then we have bad news from FedEx. FedEx is now saying goodbye to the Sunday deliveries. No more. And I say FedEx has a lot more problems than Sunday deliveries. To begin with, they must get a grip on their coked up drivers with anger issues who keep throwing packages over the fence. And of course, they get stolen. But anyways, speaking of stolen packages, we talked about the rise of organized crime. By organized crime, we're not talking about the good old times, the suits, the music, the gomars, the gabagool. We're talking about you walk to the store, you grab whatever you want, and you skip the cashier. And therefore, a lot of stores, Target, CVS, in this case, Walgreens, they adopted a lot of measures, including hiring security, which is inflationary because they have to pay for these security people. But you might have noticed that if you walk in Walgreens, everything is pretty much locked in a cage. Even Snicker bars are now locked in a cage. And if you want to open the cage, you gotta wait for assistance, and assistance is nowhere to be found because the employees in the parking lot smoking pot. So you say, okay, I'm not going to waste my time. I'm going to walk out of the store and go for another one. And this is costing Walgreens. So organized crime is costing them, but locking everything in a cage also costing the company because customers are going to skip, number one, or they might be embarrassed. They don't want to get the guy with the key to open the cage to buy condoms, for example. And this is costing Walgreens a lot of money. It's a lose-lose situation, and the name has been a loser year to date. And last but not least, in corporate news, what about Deere? Bad news for the company, good news for farmers. And the reason is, finally, farmers can repair their own John Deere equipment. They don't have to send it back to the company and get charged an arm and a leg, which was a good source for revenue for the company because they can charge whatever they want. Now this source of revenue is gone, so this is bad news for John Deere, but again, good news for farmers. Let's move on to the heat map for the ETFs, and what do we see here? We see a rebound in value. Yes, growth continues to have the momentum, but value is rebounding, as you can see, joining the rally. Yet the catch is, the rally in value is not led by the recession-themed ETFs. The consumer staples, the XLP, or the utilities, the XLU, or real estate, IYR, or even the XLV healthcare. The majority of the rally in value actually happened in what traditionally known as growth sectors, meaning biotech, but the value cohort within biotech was leading the gains today. And the result is here, the XBI, the biotech ETF, leading the pack with gains worth about 3%. When it comes to commodities ETF, we see muted reaction in oil ETFs, but natural gas is now down big. You look at the UNG, you look at BOIL, down big for the day. Therefore, I say, if you trade these things, always be closing. You're up big one day and then you're down big the next. So always be closing, at least until we have some clarity here. And lastly, when it comes to the international ETFs, we have a rebound in the EWZ. Now, is it time to buy the dip in the EWZ? Not yet. Yes, it is value. Yes, it is lagging behind. Yes, there is an opportunity in EWZ. But the problem is we still don't have stability, number one. Number two, the consumer in Brazil is already dented and damaged. The inflation rate remains too high. Consumer spending is not doing pretty good. So if you're going to invest in Brazil, buy individual names, specifically those related to commodities, if the dollar goes down. Speaking of, let's look at some charts before we wrap it up, and we start with SPY, the S&P 500 30 minutes chart. We have an upside day today. It didn't go down all the way to the support of 385, but we got a rebound. And again, the question becomes, are we seeing an ABC pattern in the making? If that is the case, then it should take us to make a higher high. In this case, the next resistance becomes 398. And of course, if you happen to be a bear, you want to see this before the CPI. You want to see the market becoming overbought and comfortable, perhaps arrogant, before the CPI. Because if that happens, the risk versus reward says CPI comes out and we see a pullback. Even if the CPI doesn't come out too hot. Even if the CPI comes out cool. Because the rally has been already done ahead of time. The rally has been already front-loaded ahead of time. We have seen this movie over and over and over again last year. Nothing new here. On to the daily chart for the continuous contract for the S&P. What do we see here? Now, folks, the lesson here is, from a technical standpoint, don't put too much weighting on these candle patterns. Shooting star, reverse hammer, laughing pig, whatever. Because that means nothing at all. All what the candle is reflecting is the action for the day. That's all there is. You have to combine the candle pattern with the momentum indicators, with the support and resistance lines, with the volume, with a lot of other information before you get a clear picture. But the candlestick pattern alone, that doesn't say anything at all. For example, according to the textbook, looking at the candlestick alone, it was a bearish candlestick indicating that you should go short because it went all the way above the resistance and then went down, flushing all of the gains, closing at the lows of the day. You can call this a shooting star, a reverse hammer, doesn't matter to me. But if you went short, you ate a pie in the face today. And therefore, I warned yesterday, bears, you gotta be careful, you gotta be disciplined here. They're gonna create many bear traps for you to be sucked in. And yesterday was one of those. Look at the momentum indicators, the RSI, the MACD. They're all improving. They're all moving toward positive momentum. You don't want to short when these indicators are reading these kind of readings, number one. Number two, the volume remains below average. That is bullish, not bearish. So regardless of what the candlestick is looking like, other indicators are saying higher we go. Now you might say, hey Maverick, why are you keeping the bear flag indicator here? The answer is because The pattern is not out of the woods, meaning the bear flag is not gone until the chart closes on daily basis above 3,960. And then the bear flag goes out of the window. And when we look at the SPX, the cash index, this is a daily chart and this is really important. 3,800 was a critical point. You heard what Art Cashin said about it. If the market breaks 3,800, we're gone, it's over. If the market keeps it, there was a rally coming, and the rally is here. It is still within range. It did not break the resistance yesterday, but it could do it tomorrow. It could do it after the CPI. A matter of fact, we could see the SPX moving higher above the sloping line of resistance, and that would be a major source for the biggest orgasm you've ever seen in Wall Street, at least in a long time. Because everybody's going to assume we're out of the woods, we made a higher low, we've broken above the pattern of resistance, it's gone. The bear market is over, folks. They're going to have Tom Lee on TV every single day saying the market will go higher by 20, 30, 50, 100%, and everybody assumes that we're out of the woods. The rally might actually take us all the way to 4,025.28, which is resistance, and then when everybody feels comfortable that the bear market is over, they pull the rug. Haven't we seen this before? The answer is yes. We go back to the dot-com days. In the 2000s, as you can see, bear market, we have a sloping line of resistance just like we have right now. And then around 2002, beginning of the year, we see a rally forming a higher low, breaking above the resistance. Everybody feels, okay, it's over. We're in the clear right now, only for the market to flush down big time later in the year. My hunch is we will see the same phenomenon again this year. On to the Qs, 30 minutes chart. What do we see here? We got the pullback all the way down to the support 269.29. Retest is okay, and higher it goes. The problem is we don't have a conclusion yet. If the Qs rebounded and closed at the highs of the day above yesterday's high, we would say, okay, the retest is good. And higher we go all the way to the next resistance at around 280. The problem is closing midway, that could open a lot of theories. Theory number one, this could be a bear flag pattern. And down we go in another retest to 269.29. But here's the other theory. We move higher all the way and we form a double top, and then the CPI gets us down all the way back to 269.29. I'm leaning more toward this scenario because the IWM supports that. We'll talk about that in a minute, but here's the daily chart for the continuous contract for the Qs. Above the important level of 11,058.5, RSI, MACD all improving, moving higher. Nothing to see here. The chart is eyeing the next resistance at around 11,689. Absent of a major fundamental surprise to the downside, the Nasdaq is moving higher. This surprise could come from the CPI, and therefore, until the CPI is out of the way, avoid making major commitments in your trades. IWM 30 minutes chart, what do we see here? Unlike the SPY, unlike the Qs, the IWM went down in a retest of the support 177.31, and it rebounded higher, closing at the highs of the day and closing above yesterday's highs. And I've been saying, folks, if I'm chasing this rally, I'm going with the Russell over the Qs, over the SPY, over the Dow. And now you see that the Russell is leading the pack. And if this continues, higher it goes all the way to the next resistance at around 183. But the fact that the Russell managed to close above yesterday's highs, is this a leading indicator that the Qs will do the same? Something to keep in mind. Dixie, daily chart for the dollar. What do we see here? Holding ground for now, but it's not looking good. It needs a rescue from the CPI. The Fed wants the dollar to keep 103 as support, because if that is lost, we see another tsunami of selling. That is inflationary. Dollar goes down, commodities go higher. And when we zoom into an hourly chart of the dollar, we see a bear flag pattern. 103 an important support. CPI is the only hope for the dollar to keep 103 as support and move higher again. It's the only hope for the Fed, to be honest. When it comes to gold, the rally goes on, but it is getting overbought. It is stalling. I'm not chasing. I think there is a rug pull coming in gold here. If we put two and two together, why would gold go down? The answer is because the dollar is going to pop big time. Now, what could be the reason for the dollar to pop big time? The answer is an upside surprise in the CPI. I'm just reading the tea leaves here. They get updated by the day. The bullish outlook was for Jay Powell to crush the market today, and then the CPI move it higher again. But the bears are getting a gift here. Jerome Powell said whatever he said, market goes higher. Let it go higher. Let it blast higher. And if you're smart, you play the rally. You go with the rally. But in, out, hello, goodbye. Always be closing. Make your profits, get out right away. And then the rally becomes front-loaded, exaggerated, overbought ahead of the CPI, and the CPI pulls all of these charts down. When it comes to UK oil, Brent oil, a weekly chart, we are at a critical level here. 77. If it is lost for the week, that is bad news for oil investors because down we go to the 60s. Good news for the administration and good news re-inflation. But here's the problem. It all depends on what's going to happen in the aftermath of the CPI. So we have to wait till the CPI gets out of the way because if the CPI comes out above expectations, we're going to see the dollar moving higher. And in that case, oil is going to get crushed. So the move would be long stocks where energy is a major input cost because that input cost is now getting smaller. On the other hand, short stocks where a higher dollar is a major headwind. For example, we looked at Netflix, Microsoft, any company with international exposure, a higher dollar is not good news. Likewise, if the CPI comes out below expectations, we see the market rallying, the dollar goes down, and oil is going to blast higher. And the move would be go long stocks where the FX impact is significant, meaning a lower dollar is a major tailwind. And then you short stocks where energy is a major input cost. These are transportation stocks, airlines, etc. So we have to wait till the CPI is out of the way, folks. In the meantime, we move on to the 10-year yield, the daily chart. What do we see here? The important support, the critical support, I should say, of 3.5 remains intact. So any talk about the 10-year yield being done and the bond market is calling the Fed bluff, bullshit. If the CPI comes out hotter than expectations, we will see the 10-year blasting higher. And watch for this phenomenon, folks, ahead of the CPI, if the market rallies along with the 10-year yield, but specifically the 2-year yield. What is the message here? It will be that the bond market is seeing a hotter CPI coming, which will make rate expectations move higher. Meanwhile, the stock market remains in la-la land, rallying based on no fundamentals at all. And in this case, getting ahead of itself, and therefore the trade becomes you fade the rip. Now, fade the rip doesn't mean you short, but it means take your profits from all of these long trades. TLT, a daily chart, what do we see here? Back at the support, 103.5 again. I'm in no rush to chase any rally in bonds here. Let it close the day, better yet the week above, 109.5, and then I'm interested in adding exposure to the TLT. VIX 4 hours chart, what do we see here? While the closing above 21.83 was bullish for the VIX, bearish for the SPY, today the VIX gave up the rally and closed below the important number, making a lower low. Now, what does that mean if we're going to read the tea leaves maybe correctly this time around? Maybe we see a rally in the SPY tomorrow in anticipation of the CPI. The VIX goes down all the way to 20. And every time the VIX goes down to 20, we see a rebound in the VIX and a pullback in the SPY. Will this be the case? Certainly the bears hope so. Apple 30 minutes chart, what do we see here? It almost gave a short signal because it lost an important support, which is the top of the breakdown candle. But by the end of the day, it managed to close above it. So the prospects of an ABC pattern that could take us all the way to 134.37 is still here. You don't want to short Apple right now. Let it go higher. Let it play catch up with Amazon, with Meta, with the rest of them. Let it get overbought. And then it's going to be time to pull the trigger and buy puts on Apple. Likewise, when it comes to Tesla, I wish that it went down all the way to 113, closing that gap and then rebounding higher. Because that would have been a clear signal that the retest is okay and higher we go. But now it opens the possibility that this is a bear flag pattern and the retest to 113 closing the gap has yet to be done. The bullish way to look at it as it doesn't need to go all the way down to close the gap at 113 right now. It's going to do that at some point later on. But for now, the momentum goes on. It pulled back, buyers are showing up from the sidelines, and we have an ABC pattern in hand, which could take us all the way to the next resistance at around 128.62. Why this number? Look back at the chart. It was a number, a zone where the chart got rejected before and pulled back. So this becomes resistance right now. And since we don't have any update for Bitcoin, let's do some bonus charts. And we begin with AMC apes. What's going on? Any apes alive? Anybody? We've been seeing a rally in meme stocks, be it Bed Bath & Beyond, GameStop, but AMC has been the notable absence here. Now, when we look at the daily chart for AMC, yes, it is forming a bear flag pattern. But before it plays out, it's giving buyers the opportunity to hop in. If you're waiting on the sidelines, this is the time to hop in, because if nobody hops in, down it goes, the bear flag plays out. My hunch is, looking at the momentum indicators, being oversold both the RSI and the MACD, and they're firming their way higher. My hunch is AMC is going to play a catch-up rally here that could take us all the way to closing the gap at around 5.5. I'm not going to go all the way to 5.5. I bought the $4 calls for next week's expiration. If it plays out, it plays out. It doesn't, it doesn't. And then we have the ticker BABA Alibaba. Daily chart, what do we see here? Blasting higher, rocket ship. Yes, it is becoming overbought, but I caution from catching a falling knife here the other way around of buying puts, shorting Alibaba, hoping that this will be the day it goes down. Because the rally could go on all the way to closing the gap above. If it gets there, the sooner the better. I'm going to pull the trigger and buy puts. And this gap stands at around 121. Because if it happens fast, the chart becomes really, really overbought. This is what you want to see when you buy puts. The risk versus reward becomes on your side. But a pullback is going to happen. And last but not least, what about FCX Freeport McMoran, a weekly chart? I own the name. The problem is, it is getting ahead of itself in this massive rally as of late. The weekly chart actually opened the gap. So yes, it broke above an important resistance, 40.21, and this energy is being released. But if you look at the shorter range charts, be it the daily, the 30 minutes, the hourly even, they're all becoming extremely overbought. In other words, shouldn't the chart move down to close the gap in a retest of that support, 42.28, and then take it from there at least? This is what I see. So I am long FCX, but I see that this is an opportunity perhaps to hedge some here by buying some puts and maybe play some downside momentum if it happens. Now, if you put 2 and 2 together, if the CPI comes out too hot, dollar moves higher, copper moves down, FCX goes down big to at least closing this gap. This is what I'm betting on. But mind you, I'm still long the name. I still own the stock. I'm just buying put options here to play some downside and to hedge these recent gains. Lastly, moving on to the conclusion of this video, what do we have in the economic calendar tomorrow? We don't have much here. We have the mortgage rate and we have data from the EIA regarding stocks for both gas and oil. But the most important event will happen overnight from China. We're going to get the inflation rate. We're going to get the PPI. And this could move markets one way or the other. With that being said, this is all I got for you for now, folks. Thank you for listening. Thank you for watching. And I will talk to you again tomorrow. Good night.
I've seen the trades. They're fake. All fake. Basically just a big Ponzi scheme.
What's a Ponzi scheme?